An old Asian residence program is on track to come back. It's premium, it's tax-friendly, and it may be here as soon as next year. And honestly, this was probably the most interesting program on my radar when I started researching the idea of go where you're treated best many, many years ago. It's Hong Kong's Capital Investment Entrant Scheme, the CIES, and it was scrapped back in early 2015 because the territory just said, yeah, we got enough people, we have enough money, our banks have too much money, they're too conservative as it is, like we don't need more money, we're fine. And now they're saying this Hong Kong residence program may be coming back. We've been seeing a number of new residence options in Asia over the last couple of years. Cambodia, Indonesia rolled out a new product. Malaysia has made some changes to its product, but we've seen kind of additional options there, not always for the better, according to some people. But we're seeing more residence options in Asia. And yet we're also seeing developed countries like South Korea take some of the options off the table in the same way that, let's say, Portugal's golden visa decided to stay open, but take some of the easier options, the ones that they thought really weren't adding to the economy, off the table. Now Hong Kong has said about a year ago that they want to bring the CIES back. And we're starting to get details of what that might look like. What I've always told you about Asian residence programs is they favor wealth. If you have an income, let's say you're watching this in the West, or let's say you're watching it anywhere and you just have a decent income from remote work, from freelance work, you have your own business. If you have anywhere from $1,000 to a couple $1,000s a month, many Latin American countries will grant you residence. What Asia wants to see, and I think culturally and given the history of immigration in these regions, it makes sense, Asia wants you to put money into their country. So I think one of the better deals in Thailand is the investor visa. You just put money in a bank, you put money in property. Here's your investor visa. What Hong Kong is talking about doing is opening back up a lot of different asset classes with the exception of residential real estate. We're not sure if commercial real estate will be allowed, but certainly there will be different funds, there will be different investment options, shares, things like that. And when the program first started back in the early 2000s, it was 6.5 million Hong Kong dollars. That's a little bit under $1 million. Due to popularity, they bumped it up to 10 million Hong Kong dollars, so right about like 1.28 million US back in the early 2010s, and then discontinued it late 2014, early 2015. So it's been almost a decade since this program has gone away. Obviously, inflation around the world has driven down the currency of, let's say, the US dollar. The Hong Kong dollar trades in a very narrow band, so it's basically 7.75 thereabouts to the US dollar at all times. So putting money in Hong Kong dollars theoretically, gives you the protection of the US dollar without some of the baggage of the US dollar. But anyway, what's changed besides the US dollar becoming worth less in the last near decade is the fact that particularly in Asia, you got a lot of wealthy people. We're seeing more people, wealthy folks from Asia than ever coming to us from Singapore, from all sorts of parts of China, from Taiwan, Vietnam, Thailand, South Korea. We are seeing more people looking for our help to get second passports, to get asset protection, to open bank accounts somewhere else. And so now, 10 million Hong Kong dollars, they're talking about tripling that if they open the program back up. 30 million Hong Kong dollars will be the requirement, is what we're hearing. So we're talking, 3.7 million US. Now, before you dismiss that out of hand, let me explain why this may be interesting. Historically, Hong Kong CIES was like 94% of people came from the greater China region. I think only about 6% of the applicants of close to 40,000 people came from anywhere else. Now, technically, what they did in the past, and I imagine they'll do again, is they said mainland Chinese can't simply apply. And so you had this bustling trade where mainland Chinese had to go to like the Gambia and get permanent residence or a passport, and they would have like ads in the newspaper like $30,000, $20,000, get your Gambia PR, and then come back and apply for Hong Kong. There were a lot of Gambians suddenly moving to, or a lot of Guinea-Bissauans, I think, also were moving to Hong Kong back in the day. We'll see. Obviously, Hong Kong and China closer now than they were a decade ago. We'll see how strict that is this time if they make people jump to that hoop. But there's talk of capital exodus from Hong Kong. talent exodus. I think in the last couple of years, about 140,000 people have left. Now, I happen to know anecdotally a number of expats who went to Singapore or who just went back to Europe or somewhere else during the pandemic because Hong Kong was more strict, who said, you know what, I want to go back. It is a vibrant city, they say, and I happen to agree. As I get a little bit older, I see the merits of a place like Singapore and it'd be a little bit quiet, a little bit more orderly. But Hong Kong, there is a buzz that is hard to find anywhere else. It is a one-of-a-kind city. Certainly, English being spoken is becoming a little bit less, I think, or maybe Chinese being spoken as the main language. I mean, you have about, I think, 1 in 5 people in Hong Kong now is from mainland China, and so it's kind of pushing out some of that English-speaking past. But I see this as a plan B, as a potential place to live that's tax-friendly. I see it as access to Asian markets. I see it as the ability to put money in a place that is still offers, for example, dividend tax-free, capital gains tax-free investing, has some of the higher yielding stocks of any stock market in the world, is part of a rapidly growing economy. And you know what? They actually came and said, hey, okay, listen, stuff has happened. We've done some stuff. We got to get some people back. What are we going to do to make it easier for them? I'm always going to have some respect for that because where I come from in the United States, it's always just blaming the people who left. Here, it's like, all right, people left. How do we get them back? And I think that while 3.7-ish million US dollars is certainly a high price tag, that's not a donation. You get to put it into stuff. And if we assume that the rules last time are that even if the value of your investments, let's say you have some shares, if that goes down, that you don't have to top up. Basically, this is for somebody who wants to invest in Asia. And again, the tax situation on investing in Asia is better than it might be for many investments in the West. And you get a residence permit thrown in for free. So for certain investors, this is almost just an add-on. I mean, if you look at, let's say, Thailand's investor visa, if you're looking for bank accounts around Asia, banks in Thailand aren't bad if you go with one of the big 2 or 3 banks. And just putting some money in the bank and keeping it there, that might have been part of your plan already. Just claim the residence permit. In this case, if you're looking for places to park your money, asset diversification, maybe you want to put stuff in a currency that's basically pegged to the US dollar, but again, not actually hold US dollars, not hold them in the US, there might be some good overlap. And so Hong Kong remains a tax-friendly jurisdiction for people who live there. If you do live there, then it's maybe not the best place to actually run your offshore company. But if you are an investor, if you're in crypto, if you're in any number of things, this could be a tax-friendly place to live. But if you don't live there half the year or more, then it's a tax-friendly place to invest. And so the idea that, oh, this is China, to me, I want to have in a multipolar world different options. If things go terribly wrong, I can always pull out. I don't have to go there. I don't have to live there. This is not saying to get a residence permit, you have to move there and live there full time. This is giving you the option to live somewhere in exchange for making investments. And you can come and go. If you want to spend 7 years there and you want to make some commitment of your time there, you can get this right of abode, this sort of permanent residence. It's not really a place to get citizenship, although I suppose some people kind of do this weird, like, give up my old citizenship and then kind of wait for Hong Kong to kind of come in and give me this, Hong Kong, China passport. It is a place that you can live that a lot of, particularly European expats, as well as people from all over Asia, they just want to have that access to somewhere better. And so I see the West as declining. I see the West as, in the larger countries, not saying, hey, we lost people, what can we do to get them back? I see them cracking down. And listen, this is not to say everything that China does is spectacular. I happen to have spent a lot of time in Hong Kong. I know people who want to go back and live in Hong Kong. It was the freest economy in the world for years. Obviously, things change, and perhaps some things changed in the wrong direction. But let's not get all of our news from Fox News and the BBC if we want to be nomad capitalists. I think there's still a benefit to having a connection to that part of the world. And so let's take a look at what you can invest in. Stocks, bonds, and funds. They'll make a list of funds. In fact, I think the old list of funds is still up there. Expressly excluding residential real estate, unconfirmed as to whether commercial property will qualify. So I think there was kind of a push to have people invest in some of the actual funds, stocks, and bonds. I mean, imagine you could just simply go in and just buy a bunch of shares of the Bank of China on the Hong Kong Exchange, or China Mobile, or any number of the different REITs or the conglomerates. I mean, Swire, or what are the other ones? There's a whole bunch of. I mean, the Hong Kong market's very well developed. And so what'll be interesting to see is what are the final rules in terms of how these can be structured. But if I'm buying shares in Hong Kong, again, no dividend tax, no capital gains tax. Now, if I'm an American or if I have that U.S. person status, then I will have some of that. But otherwise, Hong Kong is not going to tax me that stuff, including if I live there. And so theoretically, you could live in Hong Kong and pretty much pay zero tax while investing this money. There are some of the stocks in the Hong Kong market are paying 6-7% dividends tax-free. Compare that if you're a dividend investor to what you're getting buying similar quality stocks. Let's say a bank stock in the U.S. What's the average yield? 2.5%. If you live in a tax-friendly place, it's probably going to be 30% withholding tax. You're looking at 1.75. You've got yields. Some of the yields in some of the Hong Kong bank stocks seem almost too good to be true and maybe cut in the future. But let's just say it's 6 or 7. What's that? 3-4x net yield in your pocket, for example. So someone who's attracted to that, someone who wants bonds, someone who wants funds, someone who wants to be able to invest in Asia. I mean, Hong Kong still has that kind of commercial center status within Asia. A lot of that's moved to Singapore, and there's a lot of the same benefits in Singapore too. But you know what Singapore is charging these days? I mean, if you want some of the passive investment options for permanent residents, I don't think they'll give you citizenship either. Comes with some other conditions of its own. I mean, you're going to pay a lot more than $3.7 million in investments. And so I think that Hong Kong offers something that's worth having in your back pocket if you can afford that number. So it'll be interesting to see what comes out with this new CIES program. I'm a fan of having residence permits in each part of the world. Asia is one of the more expensive ones, particularly if you don't want to live there. But the good news is, when you look at the Thai Elite visa, for example, in Thailand, has raised some of the prices. You don't have to make those donations that you might have to in other parts of the world or with some of those lower programs in Asia. You just put your money in. The actual fees associated with this are not that bad, and you've got a certain stability with these banks. And I'll tell you what, Hong Kong banks, they don't need to be making tricky loans. They are flush with cash. What I think a lot of people in the West don't understand about Asia is we talk to folks who are from Indonesia, from Vietnam, from Malaysia. Was it Nomad Capitalist Live? We had a number of Malaysians who just came over, locally to come to the event. And these people tell us, as our clients and as our guests, they have accounts and they get treated great by some of the biggest banks in Singapore and Hong Kong, whereas an American may not be treated that great because they don't really need the person who's so far away's money. If you want to come in and get a residence permit, they're going to be more open to giving you those accounts. And I think that, quite frankly, a lot of the banks in Asia are run much better than banks in the West. They're just more fiscally conservative. That's why some of these banks in places like Singapore are in the top 20 in the world. And so there's a change, there's a sea change that you don't see if you're in the West. And that's why I think having some kind of residence permitted Asia is worthwhile. If you want something that's a bit more developed than, let's say, a Thailand, then Hong Kong could be interesting, particularly if you're someone who's looking to make investments. And we'll have to see what happens next.